But 8 straight days of market gains, so I think it's about time that some bit of consolidation creeps in. At least that's what the early indications are in markets trade. And of course, you're not trading tomorrow as well, so market may not want to take any major bets either way. Well, that's the first take on the index. Not too bad, just about consolidating with a bit of a negative bias. The Nifty is down about 30 odd points, the Sensex is down 140 points, and the Bank Nifty has also now just about drifted into the red. What's lagging? TCS is down 1.5%, post its numbers, weak numbers and cautious commentary from the management. Infosys is also down ahead of its numbers later in the evening. And IndusInd Bank is down almost about 4 odd percent, so that one's taking it on the chin this morning. Divi's Lab, after a very strong run yesterday, is coming in for some profit taking today, down about 0.8%. And then a couple of these names, Hero Moto, Tata Motors, Bajaj Auto, are just sulking a tad bit. So do watch out for that. IndusInd Bank is now down almost about 4 odd percent. So don't lose sight of that. On the upside, though, you have ONGC, M&M, Apollo Hospital, Sun Pharma, Coal India, HDFC Life, Eicher Motors, a couple of these names that are looking pretty good. ITC has been gaining quite a bit of ground. It's almost at 400 now, ITC. So that one's also gaining some amount of traction this morning. Cipla is also holding up in the green as we speak. And in the broader markets, something like an AU Small Finance Bank, after the RBI has okayed the reappointment of MD and CEO Sanjay Agarwal. AU Small Finance Bank is the one that's up 10% right now, so it's definitely the stock of the moment in the broader markets. And Nigel will talk more about that, but for now, very quiet, just about consolidating with a negative bias. It's IT and IndusInd Bank that's dragging them up.
Well, that's right, Sonia. A few stocks, though, that are on focus. Lupin, that one's reacting to those observations that came in from their Pithampur unit. Remember, CNBC-TV18 has accessed that, and they've been issued 10 observations, so that's why that stock is down close to around 2%. The US FDA has said that, in fact, 4 out of the 10 are repeat observations. That explains why that one is a little bit lower. Anand Rati Wealth from the broader markets is reacting to its numbers. They missed their AUM guidance by close to around 2,000 crores odd. We'll have the management with us in the next 1 hour or so. For the time being, though, the stock is reacting positively. It's up close to around 1.5%. RVNL, well, they've got a letter of award from Northwestern Railways, project worth around 60 crores, so that opened up in the green. Transformers and rectifiers, they won an order of close to around 100 crores. It just came in, so that stock as well is reacting positively to that piece of news. And as Sonia said, the key stock today that's moving higher is AU Small Finance. Mr. Sanjay Agarwal has got an extension as the MD and CEO, and that's why, in fact, that stock is flying away. The extension is till April 2026. So a big move is what we're seeing on that one. Prashant?
All right, 17,785 on the Nifty is what we have. We're down about 30 points now with 2 minutes of market behind us. TCS is settling down. It's just a 1 1/3% cut. So not a large one. In line with, as I was saying, the amount of earnings which have been taken down by the street. I mean, actually even lesser than that. 3,200 or so on TCS. Infosys is down 1.8. That reports later. I think at least the buzz is that the Infi numbers are perhaps not going to be great either. IndusInd is down 2 3/4%. IndusInd is coming up with large volumes. Divi's is down about 3/4%. Lots of tech names. HCL Tech down 2. Tech Mahindra down 1.6. Persistent down 1.9. KPIT down 3/4%. LTI Mindtree down about 2%, Wipro down 1%. So it's the top 10, top 15 stock board is populated by technology stocks, both large and mid. Bank of Baroda is another one which is down about nearly 1% or so. But there's not very much. I mean, large coming through in either direction, except, of course, the AU Bank stock, which is limit up. Fact that is Fertilizer and Travanco, that's up about 7%. I think we mentioned RVNL. Escorts is another one. Phenolics Cables is coming up with a 2% pop. Hindustan Zinc is up about 1.5%. Campus Footwear is coming up with almost a 4% gain. But again, I mean, volumes are a little, they need to pick up. So let's see if they do. Oil India is up about 1.6%. Rights is up 1.3, 1.4, and so on and so forth. It's a quiet Thursday open as far as the market action so far is concerned. I mean, the Adani Group stocks are all also quiet. I mean, none of them figure in the top list in terms of volumes, at least. Adani Total Gas, you've got Adani Ports, Adani Transmission Enterprises. They're all absolutely flat. Green is in the green a little bit. Adani Power is absolutely flat, but higher just a tad bit as well. So that's the market picture for you. Market breadth, though, it's too early to make any conclusions based off it. Is positive. I mean, the advances today, the overall NSE advance decline ratio is almost 2:1 in favor of advances.
You know, just one point on IndusInd Bank, AU Small Finance Bank, they've got their extension for around 3 years. So the street is a little bit skittish that IndusInd Bank got, street thought that maybe the new norm is 2 years because the IndusInd Bank, MD and CEO got their extension for that. So the reading is maybe, in fact, why did they get only 2 years if in the next 1 month or so, you're giving another bank, AU Small Finance extension of 3 years. So I think that's why the street is a little bit skittish on IndusInd Bank, and that explains why the stock is a little bit lower. Just one of those assumptions that we're working with.
Also, last few days, as our colleague Vivek was also telling us, there's that MSCI rejection, right? The street was expecting, I think, that MSCI inclusion would come. It didn't come through. So since then, that stock has only been sort of nosediving. But in any case, yeah, a couple of reasons for which the stock is under pressure.
So it's come up about $50 from the lows already. So let's see. I mean, the low is actually 40. 1,007 was the low today. Now at about 1,050. So a sharp sort of cut, and then there's a bit of a pullback. We're still down about 2.5%. Andrew Holland is Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. He's joining us with his perspective on things. Andrew, good to have you with us here. Thank you very much. Very nice move upwards over the last 7-8 trading sessions now. What next, though, is the question. I mean, I think that's the question out there in the US as well, where data is not very conclusive in terms of whether it means interest rates, which is the big bugbear, will stay higher for longer, they need to go up more, or we're done with the hiking cycle. What's your own sense? Where do we go from here?
Well, I think in terms of the rate hike cycle, I think we're there or thereabouts. It's quite interesting. You listen to the Fed speakers this week. That even they are kind of divided in where they think what they should be doing. And some saying we should have more of a rate hike, one more rate hike, and then go and pause. And some saying that maybe enough. We've done enough already because the tightening credit will do the next trick. Interestingly, though, there are also some of them talking about a mild recession in the US. So I think we're heading there. So there was two things that we've always talked about, Prashant, and the two factors which would make the Fed go and hold. One was unintended consequences, which we already have, and two, the fact that we're heading towards whether it's a mild recession is debatable at this point. But I think that I would think they do an RBI, and they should go and hold, and I think that would be the best thing for the markets and for the credit markets in particular. So I think worst case is they do 25 basis points and go and hold before they start reducing before the end of the year. So the good news is that we will see rate reductions towards the back end of the year. And possibly the RBI could be a leader in that and maybe take a first step in October at reducing rates. So getting more constructive over the kind of longer term from where we were, say 6 to 9 months ago, and it's playing out, the kind of way we were thinking, and that get some pain, then we'll start to see the Fed pivot, and then that will be good for markets.
Okay. By the way, the technology stocks are still under a bit of pressure. Infy, TCS, HCL Tech, Tech Mahindra are all your top nifty losers right now. Andrew, hi, good morning. How are you feeling about technology? Clearly, there are headwinds coming through, and when the largest company tells you that, you got to sit up and take notice. Do you see more derating for this sector now?
I think in the short term there will be a further derating, because if you are looking at a mild recession in the US, this will affect many sectors, not just the banking sector. And then TCS, kind of outlined that in their statement. It's broadened out from the kind of financial sector into other sectors. So it's going to be a hard slog for these companies. And I think probably we're going to see more downgrades to earnings for this sector over the course of the next 6 months. Now, don't take anything away from the whole technology, build out over the next 2 to 3 years is going to be substantial as well. So there will be a time to buy, but I think let the downgrades come first, and the prices react to that before dipping toes, I think, at the moment.
All right. Hi, Andrew. Good morning. A quick check on the markets. We were down 30, 40 points hard. We have moved back into the green. The Nifty Bank has recovered a goodish bit as well. So from an index perspective, pretty good going. And the Nifty Bank, that's the one that's driving ahead. But Andrew, you all run a long short book, right? How has that positioning changed in the last 1 month or so? And if you could give us a sense about how you position now?
Yeah, so I mean, it's obviously, with the markets, getting under that 17,000, there was a lot of fear that the contagion from the banking system would continue. That hasn't played out, and the first part of the recovery, not just for India but also globally, was short covering. There was a lot of shorts by the FBIs coming into this month, and I think that's been unwound to a large extent. So obviously, playing on that. In terms of the kind of rebound, I think we've probably done a little bit of where we need to go in the very short term in terms of the recovery, and I think now we're just going to probably stand pat a little while until we get the Fed speak. Not necessarily what the outcome is, but the speak in terms of May the 2nd, May the 3rd. So I think it's going to be a little bit of trading range from where we are today. So. Playing that around, I think it's going to be very rotational. I think the banking sector should show some good growth, and the IT sector against that will show some weak results.
Andrew, Sula is up about 2.5%. It's been doing well. I know wine is a big subject in your household. What do you like, and what do you, as you say, you describe it, renting, and what are you buying? What's the what's the thought process now? Broadly, I know you don't want to talk about stocks, but sectors.
No, we do like the beverage sector. We think that there is a move to premiumization across the board, and that will play out over the longer period, not just over the next 6 months, but over the next 2 to 3 years. And you saw that in Sula's results as well. So I think that's a big trend. We have a young population who are willing to try and move up the curve as quickly as possible in terms of what they want to drink. So I think that bodes well for that industry. So, if I look at kind of FMCG and beverage, I think that beverage has the growth and the defensive qualities compared to FMCG, which has the defensive qualities, but probably less growth in the very short term. So that's one of the things that we do like. And in terms of, what we're renting, I think having seen the markets move up quite quickly at the moment, I think it's time to just pause and take some of these gains off the table in the very short term.
Okay, so for the viewers who don't know, I think Andrew's wife Sonal is a wine educator, a connoisseur. It's great, right? When your wife is like or your spouse is either a chef or a wine connoisseur. I mean, you're always well fed. And are you well drunk, Andrew?
Not at the moment.
Hopefully not at the moment.
Yes. I mean, two things on that. One is it's very, very nice now when you go to a restaurant, you don't have to look at the wine list. So that's one good thing that I don't have to do anymore. And two, obviously, you get invitations to taste some of the top wine. So that's not a bad thing. But usually I'm more kind of to looking at. How the beverage industry is going in terms of craft and tasting.
Okay, so investing in it is perhaps better than tasting it. I don't know about that. But what about some of the other spaces? I mean, this whole new age technology companies have sort of they're trying to make their comeback in some way, whether it's a Nykaa or a Zomato. But competition is also getting pretty intense here. Is this a good time to be buying, or given that we could be heading into a recession, there are layoffs, etc., this is a space that perhaps you wouldn't touch?
Yeah, I think I obviously saw the reports of Reliance opening up a similar kind of Nykaa kind of franchise. So obviously that's going to lead to more competition. So just when you were hoping that these companies were kind of getting towards that profitability and moving forward, you've got a new big player in town who could disrupt the pricing a little bit more. So I'd like to see how that plays out over the next 6 months. But if you remember from some time ago, I was liking this space a bit more, and it was starting to turn around. But I think with the competition now, I think again it's just time to kind of look and see what happens and see how the aggressive if there is aggressive pricing in this area, which will affect the companies.
All right, Andrew, in the past you've mentioned that defense, renewables, and I think the travel and tourism space was something that you liked. Have you changed your stance, or you continue to remain positive on it? Because some of these stocks have done very, very well.
No, continue to like it. I mean, it's going to be, we know on defense and renewables, it's going to be an ongoing global capex expenditure. And now the problem with defense is that, the orders are very lumpy, and we saw some recently. So, you can never be assured when that kind of order is going to be given by the defense ministry. But once they are, they're very lumpy and very big. So I continue to like that. Hotel and travel industry. I mean, you've seen the numbers, right? They're just fantastic, and still getting a hotel room is fraught with prices you didn't think you'd have to pay before or have paid before, and that will continue. And I think tourism into India, I think will continue to pick up as well. So I'm very kind of happy to keep that theme going for a number of years as the economy continues to grow. People within India travel within India rather than going offshore as well. So I think there's a lot going for the whole industry, and hotels is one which I think will benefit because of occupancy and the leverage they're getting from the food and beverage sales.
All right, Andrew, we'll leave it at that. Well, okay, just before we let you go, right, one space that I wanted to check with you was autos, because there has been a big comeback in that space. I mean, this year, stocks like Tata Motors, Bajaj Auto have been the biggest gainers, up almost about 15-20%. Any thoughts whether there's some follow-on buying that you're expecting to see here? Do you like this space at all?
Yeah, it's been very rotational, hasn't it? I mean, a few months back, no one liked the sector. And you were seeing downgrades to earnings and lackluster sales. So I think it's more rotational. I think we get oversold, and then you get the bounces very quick. But to be honest, there has been a lot of roadshows by Tata Motors recently overseas. So I think that's helped the stock in the recent rebound as well. But it's not a sector I'm getting overly excited about at the moment. I still think there's other areas like private capex, where you can make more money in industrials.
All right, Andrew, final question before we let you go. How does the English Premier League season wind up this year? Man U makes it to the top 4, and who takes home the cup this time around? Arsenal, or do you believe Man City has got enough?
Well, for Sonia, I'm sure she would want it to be Arsenal. But now they have. In fact, it's in City's hands, right? I mean, they will play Arsenal, and if they beat them, then and win every other game, then it's theirs. So I hope it's a tight race, because it's been very interesting, right? It's made it a little bit more interesting to watch this season rather than just the usual kind of Man City and Liverpool. So I can't say that I want Arsenal to win, but. I suppose.
Andrew, you can be on our side for once. We have had a rough couple of years, and we were hoping for the title. I mean, I'm in Sonia's camp as well. So let's hope something works for us. And
after a long time, right, Arsenal has kept the challenge alive. So it's, as you said, I mean, it's good football, whatever it is. We've seen a comeback after a while, so we're gunning for it. But Andrew, thanks a lot for joining in and speaking to CNBC TV18. Appreciate your thoughts. So that's about two passions, equity markets and football, right? For the
we had a bit of wine in the middle as well.
That's not my passion, though. I mean, maybe for you guys, long weekend coming up.
Probably.
All right, but for the market, it's not doing too much. I think people have checked out early, this weekend, because the market is very, very quiet. It's only TCS which is a tad bit under pressure, not too much either way. HCL Tech is one of your big losers this morning, down about 2%. But there are some big M&A deals which are back in the spotlight with the $2 billion Temasek Manipal Hospital transaction that went through. But is there more in store in FY24 in the healthcare sector and beyond? Two experts are joining joining in the M&A space. We have Gopal Agarwal, who's the Managing Director and Head Investment Banking at eDevice, and Deepak Sharma, the Managing Director and Head M&A at Axis Capital. Gentlemen, morning to both of you, and thanks for taking the time out and speaking to our channel. Gopal, I want to start with you. Can you tell us what is the number of deals that you're expecting in this fiscal year? Because now the momentum has started to pick up again. And what kind of value are we looking at in FY24?
Well, thanks, first of all, for having me on the show, Sonia. Although if you look at the trends, maybe it's a bit negative, compared to, let's say, the H1 of last year, you saw much lower activity in H2. But personally, I do believe there'll be a lot more action in the M&A in FY24 for primarily 2 or 3 reasons. So one, you are having lots of private equity sitting with lots of dry powder. So they would look at doing buyouts. You have lots of corporates, large conglomerates who are sitting with cash and capital on their side. So they would look to consolidate the market. So personally, I do believe there'll be a lot more action in FY24 for us in the M&A space.
All right, Gopal, if you believe that there is going to be more amount of action, which sector would you think that there could be a more amount of action? I mean, we have seen the pharma healthcare space as well in the last 1 month or so. Suddenly it's come back to life. But any other sectors you're looking at, or do you expect more of the same in this space?
No, so you're right. I think pharma and healthcare has seen some bit of action. Beyond this, I do believe, sectors like renewable, especially solar, you would see action around EV. You would see action in also in US tech, where you will see a lot of consolidation again happening, wherein a lot of smaller companies, given the funding winter, they would get consolidated, wherein, some of the large guys who are backed by private equity would find them as an easy target and, probably would look at acquiring them. These are some of the sectors, which should see, I would say, a lot more action, in FY24.
Gentlemen, good morning. Deepak, coming to you, what is your own sense in terms of what we're likely to see this year?
Good morning. I think, as Gopal put it, there's clearly some positive sort of tailwinds coming through in terms of the corporate confidence and the way India is positioned in the global, financial ecosystem right now. All of those are positives. I think there are a few cautionary, counters as well. For example, the interest rates are going up. In terms of if we really look at what happened on the debt market changes and the fact that the mutual funds will have lesser debt pool to start investing, and given the way the acquisition financing in India happens, they were active participants there, so there could be implications coming out of that. Export oriented targets, there is a sense of caution coming through because things really haven't really played out fully in terms of the impact of the slowdown in US and the European market. So there is those export linked businesses where there will be a sense of caution. But net, I think there is going to be the transaction timelines are going to be longer. And one other thing which sort of favors M&A is the fact that public markets, are not at the frenzied pace they were last year or over the last couple of years. So there is more time for people to analyze and then take some informed calls. So all in all, in balance, I would presume, and then actually we are seeing that there's a lot of transaction dialogues on in the private markets. Deals are taking longer though because people need to be convinced on all these variables which seem to be increasing the volatility in the market.
Okay, and I guess deals are taking longer also because there's a lot of uncertainty, right, overall in the market as we are perhaps heading into a big recession. Gopal, that brings us to the question about how investors could fine-tune their playbook to invest into recession-resilient themes. How do you see it play out over the next 12 months?
So, again, when you talk about a global perspective, of course, there is maybe a recessionary pressure, but I personally don't see there's too much of that challenge, in India. It's a large market, one of the largest I would say, economy, which is, showing, even if one was to look at some of the recent reports, we'll still be growing at anywhere between, let's say, 5.5% to 6% in terms of GDP. So I think, there are, I would say tons of sector, which would, act as a positive catalyst. And also look at it a little differently. A lot of PE nowadays are acting as a catalyst to support, let's say, the corporates or large conglomerate, which was not seen maybe, let's say, a couple of years back. So rather than, while they are doing enough and more buyouts on their own as well, they are supporting a lot of corporates, by funding them, who in turn are using that capital to acquire companies. So I would say, it's kind of a what you call good of both the worlds coming together, wherein you are using the experts of the corporates and capital from the private equity which net would ensure that there's enough and more kind of a, let's say, win-win situation for both.
All right. If could you put a number to, what kind of M&A activity we could see this year? I mean, how much higher could it be than the last year?
I guess kind of anybody's guess, but my sense is that, let's say last year, roughly it was around, around 100 billion M&A.
Yes.
Of course,
Yeah.
if you take out, the two large deal, which is the HDFC and HDFC Bank and L&T Mindtree, that itself was roughly around 60 billion. So I would say on a normalized case, we are more talking about a 40 to 50 billion kind of number. My sense is that we should definitely look at, with the exception of any large deal, a good 20 to 30% kind of a upstick in activities.
Correct.
Okay, just a quick point. I mean, we've seen, which specific sectors, Deepak? I mean, just to come to you, Gopal gave us those sectors where he thinks there will be deal activity. Which are the sectors, according to you, where despite some of the concerns you highlighted, higher interest rates, etc., which are ripe for activity taking place? Because valuations are also another thing, right? In private markets, they were completely out of whack a year ago, even 2 years ago, even more. And they've come down, although some would say they still have some more way to go. Your sense, which sectors are ripe for deal making?
So I think the demographic linked sectors, the consumer, the healthcare, those will continue to see momentum. There's no question on that. In the infra space, there's a lot of churning of capital that will start happening. Now that, the InvIT REIT story is, I would say, reasonably well established in the country. That is one space where, we believe that some of the larger platforms that have come through and which have gotten public acceptance and where the investors are already in the saddle, they will bulk up more and more. And that is a space which will see a lot more action. In terms of consolidation in the tech space, unlike the growth linked investments which were happening earlier, this will be more consolidation now because there is bound to be a slowdown, and the slowdown typically, the larger players actually get stronger as the vendor consolidation is happening. So that's another space where things will happen. Some of the sectors like chemicals and API, which saw a lot of action in recent past, there may be a relative moderation there, but these sectors, all of these will continue to thrive in our view.
Gopal and Deepak, thanks very much, both of you, for joining us and giving us a picture of what the M&A scene may look like in 2023. Thank you very much. The market, by the way, for now is back in the green. We're up about 5 points. It's not as if we were down majorly, but we're in the green. AU Small Finance Bank, from being up 10, is now 15% higher. It's limit up. Fact, the fertilizer company, was up 9. It's up almost 15%. Apollo Hospitals has moved up sharply. I mean, we're talking about deals. Manipal was the last deal we saw. Apollo Hospitals at about 44.29. Escorts, Goldman coming in there, 2% higher, 1961. Graphite India is up 7% on solid volumes. And I mentioned Campus earlier. That's up about 3.5% as well. Gujarat Alkali is another one, which is a new addition to the mix, 5% higher, 662 on Gujarat Alkali. So more and more names joining the list, and the index now back in the green. We'll take a quick break here. We'll come back with our segment, Quarter Se Quarter Tak. We analyze expectations from the auto sector in the fourth quarter. Jay Kale of Elara Capital will also join in to take that discussion forward.
Welcome back. Well, keep an eye out on the Nifty Bank. We've seen a good recovery from the day's low because the Nifty Bank is trading above its 100 DMA. Earlier today as well, we pointed out the first level of resistance on the Nifty Bank could be at around that 41,710 odd. For the time being, we're trading above those levels. So just keep that in mind. The Nifty, though, is 80 points away from its 100 DMA. So very important to keep an eye out on that mark. Well, let's move on to our special segment, Quarter Se Quarter Tak. Sonia has hopped across to the big ball to take us through the expectations from the auto space. Sonia?
Well, the auto sector has seen its growth momentum slow down in Q4 across most segments. Now, dealer surveys indicate that new order inflows at passenger vehicle dealerships has slowed down, while the medium and heavy commercial vehicle demand recovery remains on track, driven by infrastructure spending, and there is a margin improvement is also on track due to price hikes and lower commodity costs. So, what are the revenue expectations this time around for the entire sector? Now, brokerage firm Nomura expects a revenue growth of about 15 to 35% in the commercial vehicle segment, a large part of it coming in from Tata Motors and Ashok Leyland. Within two-wheelers, if you look at it, Hero MotoCorp and Bajaj Auto are expected to see a 9 to 11% top-line growth, which is slower than its peers in the other segments, while TVS Motor is expected to do better with about a 20% growth, largely because of its exposure in the electric vehicle space, the iQube, which has done very well. In fact, passenger vehicle manufacturers like Maruti as well as M&M will see a higher growth due to a low base effect of last year. A growth of around 22 to 28% is expected in the revenues for Maruti Suzuki and M&M. I'll also be watching out for commentary very closely, commentary on demand trends which have been slowing down across segments, while another area of concern has been the export markets, as we know, which have remained weak for two-wheelers. So any commentary on recovery in the export market will be watched very closely. Let's also leave you with a valuation table for FY24 and FY25. Now, if you look at it within the passenger car space, M&M is still inexpensive compared to peers like Maruti. M&M still trading at around 15 times FY25 compared to Maruti at about 20 times. If we move to the two-wheeler space, Hero MotoCorp is still the cheapest stock, trading at a 20% discount to its own historic average and compared to its peers as well because of rising competitive intensity and a loss of market share in its core motorcycle segments. In fact, let's pose this question to Jay Kale, who's the Senior Vice President Research at Elara Capital, who tracks the space very closely. Jay, thanks for joining in. The momentum has clearly slowed down, and that's an indication that we're getting from a lot of dealers. But do you see it reflect in the numbers in this quarter itself? And what would your pecking order look like now in terms of earnings?
Yeah, hi. Good morning, Sonia. So, yes, in terms of the momentum on ground, definitely after a very strong 9 months or maybe even 6 months till festive, things have kind of to a certain extent slowed down, which was expected. Every year after festive, we see demand slowing down. March, mind you, was tad better on the retail side purely because you had one of the festive, Navratri, Gudi Padwa this time coming in March versus last year it was in April. So that kind of impact you had for the retail growth in March. However, whether that changes our view on FY24 numbers as of now, the answer is no. I mean, we are pretty much maintaining our growth estimates for FY24 as of now in terms of volume growth. Of course, CV side in FY23 was pretty stellar, 45% plus growth, which will moderate to just about double digit, close to double digit, 10-11% in FY24. Passenger vehicles will be around 8-10% and two-wheelers at around 11%. So percent growth moderation, definitely yes. But whether that was expected, yes, that was expected. And going forward, I think Q1 will see some further moderation, given that price increases have happened post the BS6 phase 2 norms. So that some bit of pre-buying already happened in March. In terms of numbers, I think
no, let me just, break it down and talk about it stock-wise. So, one of the biggest gainers this year so far has been Bajaj Auto. It's a gain of already 20%. What is the street pricing in? Is there an export recovery that the street is looking at? Is there an improvement in the domestic market? Because a lot of it has not shown up in the numbers just yet. And particularly for this quarter, what are your thoughts?
Yeah, see, Bajaj has been, in terms of numbers, Bajaj has been pretty resilient in terms of margins despite their exports mix weakening. However, whether exports is expected to come back strongly in the coming months, I would differ. I mean, I still think it will be a slow and steady recovery. Yes, probably it would have bottomed out in terms of absolute numbers, but one has to see, it is almost half from the peaks. So, at 105,000 in March, their peaks were 2 lakh plus. So recovery will be there, but it will be a slow and steady recovery. 2.5 million was what they did around in FY22. I don't see that reaching in FY24 at least. So we are factoring in a slow and steady recovery. The stock has done well also because people are expecting that at least the bottom has reached in terms of exports, and things will just improve from here on. And also some bit of positive momentum because of the expectation of Triumph launch.
Okay. So you're saying you don't expect a further upside from here?
Yeah, our current target price is 4337. So that's our official rating is accumulated.
Accumulate with a target price of 4337. Got it. What about M&M? I was just looking at that table, right, where M&M is still inexpensive compared to peers like Maruti. Of course, it also has the tractor business, so it's not an apples to apples comparison. But do you think that given the strong momentum in the SUV business, inexpensive valuations, is there more upside for a name like M&M?
Yeah, I mean, still you have the UV momentum continuing, especially on the market share side. Growth could kind of to a certain extent slow down given that FY23 was pretty strong. But I think market share is something that is key to look at, and that's something that M&M UVs has done pretty well at. Their EV order book also is also quite healthy. Tractors, definitely we are reaching largely the peak of the cycle, and frankly, me neither the street has factoring in much growth in FY24 and 25, so that's largely factored in. LCVs is something that we need to watch out for because that segment in the last quarter has to a certain extent slowed down. So you need to watch out on the LCV space. But all in all, given the relatively cheaper valuations, we still have a buy rating on it.
Okay, one final question from my end. Since you track the auto ancillary space so closely, a lot of these companies are going big into the electric vehicle space. There is new technological adoption. Where do you see the alpha that one can generate in this space? And in terms of earnings, anything positive that we can look forward to here?
Yeah, so I think in auto ancillary space, what we look at is which are the companies who can outgrow the core OEM growth in terms of increasing content per vehicle and further diversification opportunities, as well as getting into the EV space. Now, EV space, one needs to closely watch and be a little cautious because there's going to be a lot of competition in the EV component space. So the market shares in the EV component space are yet to be kind of established. But if your core product revenues are not exposed to the powertrain and they are not getting disrupted, and you are benefiting from many of the other mega trends, I think that those are the ancillaries that we prefer. So some of them that we have a buy rating on is Minda, Samil. These are the couple of names, and even Apollo Tyres. These are the three names that we have a positive stance on.
All right, Jay, thanks very much. Appreciate you joining in and good speaking with you. The market is absolutely flat, up 5, down 5, that kind of a day so far this Thursday. We have the management of ONGC now joining in on the back of the Kirit Parikh committee panel recommendations being accepted. Much of the discussion and focus has been around what this means for city gas companies, but this also has implications for companies like ONGC, which is by far the largest gas producer in the country. Arun Kumar Singh is Chairman and Chief Executive Officer at ONGC. Mr. Singh, good to have you with us here on the program. Thank you very much for your time. Prima facie, Mr. Singh, what is the impact of these recommendations on the gas business at ONGC for you?
Good morning to you and your viewers. In fact, if we see this, you have to see in the context of, I'm just going to reply in the context of ONGC. ONGC, as you will be aware that in past, ONGC was even getting a gas price of 1.79 and all that dollar per MMBTU, at least 4-5 years back. So we have now 5 price blocks for ONGC. So first, to clarify the point for you, nomination blocks we have from existing wells, we have the limit of 4 as floor and 6.5 for ceiling. That also goes up after 2 years, after 25 paisa per year. So that is one part. Second part, if you have read the fine prints of the notification, it says that from new wells and from new, well interventions, we will get a price of 20% more than the APM price. APM price at today's formula of 10% of crude, it is 7.92. So effectively from new wells and the intervention wells, ONGC will get 9.5 plus, something between 9.5 to 10. So depending on what price crude varies. And this part, new wells, you may be aware that every year, 8 to 10% production gets added from new wells because you have to keep investing, maybe to remain at same level, to just produce the same quantity of gas, because if every well, on an average, has a tendency to lose 6 to 8% production every year. So you have to see second price from nomination field. Now we have two prices. One price is ceiling of 6.5 for this year. And second, new wells will get a price of between 9.5 and 10, depending on the crude price. So now this is the two part. Third part that is also is very important for ONGC is that HPHT will have this, higher price. And third, also ONGC has got freedom now to sign long term for this any gas which is from new wells and well intervention. And also that you may be aware that some wells we have freedom, some fields we have freedom to do marketing. We have both freedom, marketing as well as pricing freedom. So basically so therefore nutshell, if you see, hence here from every year on year, ONGC profitability will be on rise, assuming that crude price will hover around where it is hovering now. So this in nutshell for ONGC is a very positive story.
All right. Mr. Singh, we take note of your point in your inputs as well. You had mentioned that gas from non-nomination blocks will have 20% premium to APM prices. What percentage of your production is from this non-nomination blocks?
No, nomination block itself, just read the order.
Yes.
This nomination block itself, any new well in the nomination block also will get this higher price.
Oh.
Okay, so this is the fine print you have to read. So there ONGC is going to benefit to a large extent, and therefore one more point I wanted to tell you and your viewers. Yes. Ultimately, what's happening? It is 10% of crude price plus 20% you get on account of this, new wells. So any new investor is going to get 12% in India of the crude price, which is the international average. Today, gas price would get calibrated if it remains linked to crude. The slope of 12 is considered universal when you link it with crude. Unfortunately, last 2 years, the gas price got completely delinked from crude. Otherwise, energy equivalency price, it is 12% story.
Okay. Can you also help us with some numbers on what the gas and the oil production targets would be for ONGC over the next couple of years? Where are we currently, and what kind of growth are we looking at in terms of production, both for gas and oil?
Come again? I didn't get you because. Sorry,
I was asking you about the production targets that you have for ONGC over the next couple of years.
So ONGC, as of now, at a group level, it is 20 million ton oil last year, 20 BCM gas, which is oil equivalent gas of 20 million ton. We have from our joint ventures around 3 million tons, so around 2 to 3, so that is 42, and 10 million ton we get out of OVL. So ONGC at group level last year was 53, 54 level. And we are hoping that this year, that is 23-24, will be around at group level at 56 or 57, to be precise, million ton. So this is the number if you are interested in ONGC production numbers.
Okay, all right. So you're basically looking at a growth of close to around 5%.
Yeah, exactly.
Volume growth. Okay, all right. Before we move on, I wanted to ask you about, since you're going to be making good profits in the next few years, as you said, things will look up. What do you do with this money? You've been paying out healthy dividend. So do you stick to that, or do you have some capex plans? So give us two-part questions. Do you intend to continue with this good dividend yield that you've been paying out? And what is your capex plans for the next couple of years?
So this question our board will have to answer, because these are the board decisions.
Your capex, at least you can tell us. What are your capex plans?
Capex plan, typically ONGC spends 30,000 crore capex per year, typically. All the group, at the group level. So that remains, that 30,000 crore pressure will remain for 2-3 years, because we have, we have this, basically some part is for new production, some part is for old production. So capex will remain, in my view, it will remain at 25 to 30,000 crore per year.
Mr. Singh, my colleague said good profits. Could you tell us what could be the incremental sort of impact on earnings? Just a rough estimate. I mean, you gave us a sense of volumes, but what will this do? These measures
so
do?
It depends on what happens to, because this sizable portion is still oil. And oil price will depend on what happens in the international market. So it is very difficult to predict that what will be the number finally. But we in a ballpark number, if you say that, I would say that we should have a healthy profit.
Okay.
Although, now this introduces a cap as well, right? At a 10 to 12% slope, in the previous regime, APM prices actually would have been much higher. So there is a cap as well one needs to be mindful of.
No, cap is today at 6.5 from only nomination field, old wells.
Correct.
And please mark my word, old wells. Old wells every year get replaced by new wells. So now in 3-4 years time, you can see ONGC at par with the international market. Even in gas, oil it is already at par with international market. In gas also, this limit of 6.5 is only for the old wells. It is not for new wells.
Okay, just one clarification. This 5% growth that you said in production, it is for oil and for gas combined, right?
Entire group level. I told group level, oil plus oil equivalent gas. O plus OEG we call it.
Okay, and can you give us a quick update on the Mozambique project as well?
Now, it is something that is moving, and we are very hopeful that something great will happen this year.
Okay, all right. We'll leave it at that. We will come back to you for more on that, when things progress. But for now, Mr. Singh, thanks a lot for joining in and speaking to CNBC TV18. Let's do one thing. Let's take a quick break on that note. On the other side, Mitesh Thakkar will be joining in for some technical trades. Do stay tuned in.
Okay, welcome back. We got the market, which is down about 15 points. Let's just have the Nifty IT index up. I think that is the one where there is a bit of a slip now, which is starting to emerge. Of course, started with TCS. TCS is still now not down in a very large way. Infosys is down more, which reports today. But I think other stocks have also taken it quite badly. And bulk of the sort of big losers are from the IT space. LTIM is a case in point, a full 3% lower now. HCL Tech is down 2%, Persistent is down 2%, Tech Mahindra and many other names, smaller names, which are down as well. So IT is a pressure point. Mitesh is with us with what he would do at this point in time. I mean, Mitesh, a bit of a pause, a bit of a halt, whatever you want to call it, but at about 17,800, what's the sense? What's the call?
Morning again, Pranav. We were talking about the fact that the index is likely to consolidate. I think that process appears to have just begun. And what is also corroborating as an evidence is the fact that the mid-cap index is doing better than the Nifty. I think next couple of days that could be the trend. Though we are not negative, I think we would want to see some pullback and then use that pullback to go long on the indices. So I think around 17,650, 620 is my preferred buying zone. Let's see if we get there. But overall, I think not the best time to have longs on the index. If you have, book your profits and wait for some kind of a pullback. Having said that, I have one buy and one sell call. Z Limited is, slightly trading on the negative side, is breaking down. So sell here with the stop just above levels of 213.5 for targets around 202. While a cash stock after a long time has come on the radar, that's having a breakout. That's Anand Rathi Broking Services Limited. That's giving a good breakout, so that's a buy. Keep a stop below levels of 848 and look for targets around 920.
Okay.